Okay guys, what's up? I have a really long video for you today. 5 days of trading. Starting off with my best day of trading by far, which is Tuesday, February 27th. I get a lot of good scalps in today. I'm really starting to go into my identity as like a scalper and swing trader. So, you know, looking for points in the market where there's an imbalance of buyers and sellers, using multiple time frame analysis to do so. And I'm really only scalping ES. I really want to be really good S&P scalper. I'll take some NQ like NASDAQ trades as well, but primarily ES, and just because it moves slower, it's easier to watch and understand. So yeah. All right, one thing I like is looks like I just missed a move. Yeah, see, that would have been a good short. Yeah, I missed that. Because I went up to the 21 EMA, and it looks like every time it's gone up to the EMA, it's bounced, it's rejected and gone down. So, yeah, sorry, I think I might have just lost my train of thought a little bit, but. Yeah, so today, Tuesday, February 27th, I scalped pretty good today. I think I made like over $300. Let me pull up my stats actually while I'm recording. $375, so almost $400. That's really awesome. So yeah, I felt really confident after today, and unfortunately, that overconfidence I think led to some really bad trading. So that's me acknowledging in my notes that I'm bored. But acknowledging that boredom is a good thing. Doesn't mean it's easy, but boredom in trading is a good thing, because if it's exciting, it means you're probably risking too much size. You're entering at a period where the market is very volatile, and maybe you shouldn't be entering. And when it is exciting, that usually correlates with losing money. So I look at I think I've set some levels here, the pre-market high and pre-market low, and then the open. And that's good, some support and resistance, especially like when it's going to be a range day like today. And so looking at that 1 hour, that looks, oh, that was the NQ, but that looked kind of bearish to me. But the 5-minute last like 10 bars or so are in an uptrend. The 15-minute looks very rangy, so I don't think I would enter now, but if I had to, I would enter long. Ooh. See, it's really tricky because like looking at the 1 hour, it looks like it's at support, but it's below the moving average, It's in a downtrend. So like that just looks bearish. But zooming in on the 5 minute, there's some wicks on the bottom side. So I'm happy I'm not in a trade here. Like if I don't know and I could see cases for both ways, the move is no trade. Looking at the 1 minute, that kind of looks like a good long entry there because it's like a wedge. Glad I don't take it though, because obviously keeps dropping. I think at this point I'm waiting to get long for it to go down to support in the bottom of the 1 minute Keltner channel. You see, I'm okay with this. I'd be okay with a long here. That's really good to see some follow through in my direction right away, pretty much. And I'd like to put that higher. I think I should, that's a nice, real nice win there, but I think I should have kept that up at the EMA. And I'm getting ready to get short, looks like. Alright guys, I'm back. I actually just had to cut because I had to take my dog outside. So I just got back from going on a walk and taking my dog out. Alright. Alright, so I'm journaling about taking an exciting trade. Now, exciting trades are bad, and excitement is usually bad. I'm just reading the notes I'm taking. So I really like, I'm taking some notes. So I really like that I'm monitoring both ES and Q, looking for like a contradiction between the two. I really like that I'm acknowledging I just took an excitement trade. I think I'm starting to remember this trade. I think I may take another excitement trade here. So ES, this looks like a great time. NQ, it's above the 21. And that is just a dumb long. Like, it's not near the bottom of the Keltner channel. It's in the middle-ish of a range. It's like kind of okay. Like, I can see the wedge from the bottom side, but yeah, that was a dumb stop out. Alright, so I correctly identify there's a little downward wedge here. Usually when you see this type of pattern, it means, you know, maybe it's gonna get long, or sorry, it means maybe it's gonna continue breaking through the level, So I'm partially biased to be short here, but I do feel like the market has overextended a little bit, I believe. I think, you know, it makes sense that the market would come down to its pre-market low, touch the 5-minute lower Keltner channel. I think that's just a good space to get long. Like, intuitively that makes sense, and that's why I put that buy order in that you see right there. And then my dog has his Zoomies. So, sorry guys. What's up, man? Anyway, where were we? Yeah, still just waiting for this long trade to start working. Looks like. And I remember I've been burned multiple times trying to get long at the bottom or at the top of one of these micro ranges. It always comes down and touches the bottom again, typically, and then you can get in. Usually, you know, it can go on for a while, so waiting to get in at the bottom is usually the right move. Occasionally, you will get left out, and that will suck. But in the long run, you'll make a lot more money waiting for it to hit the bottom. So, and same deal at tops of ranges. Always wait for it to come up. But you have to be more careful. Fading the top, I would say, in an uptrend. Like in an uptrend, you have to be a lot more careful picking where to fade. If you fade the top, in a downtrend, you have to be a lot more careful picking where you're going to fade the bottom. And this is a good place to fade the bottom because it looks so much more rangy. If you look back on the 5-minute, you know, on the 15-minute, like clearly it looks like it's at the bottom. Now, oftentimes price action looks like this. That looks like this does break out to the downside further. So this is a pretty aggressive long. But the fact that it looks like I'm waiting to get in at the bottom of the 5-minute Keltner, that is really good. Like, this is what they mean when they say good trading is boring trading, and it's also a factor of why boring trading and good trading is so hard, because the fear of missing out, you don't want to let the market go without you. And your brain, the addictive tendencies of trading, your psychology, your brain is hardwired, like millions of years of evolution. You want to optimize for the amount of times to make money. You want to increase the chances. So you're hardwired to overtrade, and overcoming that urge to overtrade is so hard. But that's why I say if it was easy, it wouldn't pay so well, because you're literally fighting millions of years of evolutionary psychology, and yeah, it's really tough. And I'm taking some notes right now. I haven't been paying attention, but it looks like I just missed a short. Like, that is a good short. And I took it. I'm happy I took it. We're below the 1 hour. I mean, there are those 2 wicks, but there is a doji. So, you know, downtrend, upper wick, indecision bar. Looks like a good place. Like that. That's why that long before was a good long trade. But this is still a good short trade, I think, because I'm going short at the 21. You know, it's at the top of, or it's 1 ATR above the 21 on the 1 minute. So, you know, the 4 hour looks like it's gonna come down again. I'm okay with this short. Like, and even if I get stopped out, it's like, so what? At least I got stopped out on a good trade. And staying patient here is hard, because like every tick, every minute, every 15 seconds, every second the market doesn't go in your favor, and you're holding through uncertainty, and it's really uncomfortable. Like, trading is so hard, and it just takes so much discipline. I mean, I've read like 2 Market Wizards books now. I've heard Jack Schwager talk about this, the author of those books, but the number one trait, putting my light on, the number one trait that all the market wizards have in common is discipline. Discipline is just the most important trait you can have as a trader. Adam Grimes says that if you take 50 trades, great discipline, but then you like follow your rules, but then you take 1 trade where you size up way too much, or you make 1 big discipline error, you cannot call yourself a disciplined trader. And look, I was patient, guys. I took a good trade, and it's working for me right now. You know, I was just up 2 points, and I'm up 2 points right now. So, you know, I'd like to see it keep breaking down to a lower level. I wish I didn't move that up that high. I wish I could let my trade work. All right, so I'm stopped out. So that was a nice win. And yeah, that's why I wish I could let that trade work, because it would have gone another couple points in my favor, more money. And, you know, it just made sense that it would go down further to that level. A little early for the long. I would have liked to see it come down a little bit further, but it looks like it's working out for me. Yeah, I guess that's an okay, because it hit the bottom of the 1 minute Keltner, and really relying on that 1 minute Keltner channel seems to be working really well for me today. I don't think I did that very well in the following days, and actually I did really, really bad from a performance point in the following days. I'm gonna read my notes here. And now, one thing I'm thinking about is the discipline in making dumb mistakes. Now, meaning you're not disciplined or meaning you're disciplined doesn't mean you don't take dumb trades and make dumb mistakes, because everyone makes dumb mistakes. I think, like, doesn't maybe like takes a trade that like has some potential but like isn't a great setup. Like, especially while you're learning, like, you can still get away with those errors if you manage risk properly, you have high enough win ratio, you make enough money on your other trades, like, to pay for your losers. So I'm not saying I'll never make mistakes, but I will want to say I'll never like size up way too much or revenge trade on tilt. I think I'll stay pretty disciplined. I won't take trades way out of my plan book. Like, I took the day I blew up really bad was Thursday the 29th, last day of February, leap day. And my God, like, I traded so bad that day. And this day, Monday, the day I traded the best, came after a Sunday where I ran like 3.5 miles and got 19,000 steps in, and I made my YouTube video on Sunday, so I watched like an hour and a half worth of film, and yet the day I did the worst. I took like a dumb trade the night before on Bitcoin futures that I was still angry about going into the next day and letting the anger emotions play in. Where like I entered, it went down to my stop loss, stopped me out, and then went my way. And had I entered at the bottom of the range, I would have made like $900 on that trade, but I lost 200. And then the morning after that was like a big 6:30 news. It wasn't non-farm payrolls, but it was a big news event. And I knew going into it, like, my plan was I think it's gonna go short. I'm gonna get into the downside, but I'm just gonna join whatever way it breaks out. That was my plan. And had I actually just followed that plan, joined whatever way was breaking out, I think it would have gone quite well for me. But I just like thought it was gonna go down, shot up, fade trade, loss. Shot up more, fade trade, loss. Shot up more, fade trade, loss. And on the last one, I actually doubled my contract size, so twice the size loss. So I go into that day like down $400 from the Bitcoin and the dumb news trade where I didn't follow my plan. And I should have just taken a break after those two losses. I knew I should have. Told myself I'm just gonna take a break, but I had to try and trade my way out of that hole. And I think I blew that account. I cut it in half. And I lost like $1,400 or something. So totally screwed up. But this is money lost in the service of learning. And this is like sacrifices I'm putting in, like risking this money. But by making these mistakes, I won't repeat them. I can assure you that's the last time I try and fade the news and think that strategy is going to make me 100 times more money in the next 5 years than I ever could lose, or than I ever have lost on it so far. Those opening range breakouts, with news and without news. Like, I really want to start capitalizing on opening range breakout trades. Now, I have not been watching because I just did that huge monologue speech, but I've been watching a little bit, but I saw I did miss commentary on a trade, and I saw I left some notes for myself too. So yeah, the data sheet was just up, but it was up for too little time. I'm gonna let this keep rolling. I'm gonna go fill up my water bottle. yeah, like, I don't like to edit my videos very much, so that's why I just let this shit keep rolling. I know it's not like a live stream or anything, and I'm like, no one's watching these videos. Like, I'm making these for no one, basically, because I'm a small channel and new, and YouTube takes a long time. You know, I can post for years and I might never blow up, and I'm really just doing this because selfish. Like, I say selfish. I don't think selfish is a bad thing in this case. I'm like doing this all for me to like review my performance and document my journey. So, you know, this is very much for me, but if people do ever start watching, like, that's gonna be awesome. I mean, I want nothing more than people to learn from my mistakes, and, you know, get this financial advice. I don't know if I would. I guess shorting here is probably a good move. Some nice follow through. Yeah. See, that's dumb. I don't know if that is dumb. I say it's looking pretty dumb. And I admitted that that was an excitement crave stimulation trade. I think this one might work out for me. It was only 6 days ago, so my memory is pretty clear, but yeah, that was silly. I'm looking at the 1 minute Keltner, and I did not wait for it. I didn't get it at the bottom of the 1 minute Keltner. I mean, it does. There's pretty low. See, this is hard because I'll tell you why it's hard. Because on the 1 day, it's clearly an uptrend. So I know it's like I should be more biased to the upside. Take more long trades. And the 1 minute did look like very low follow through on the way down. But obviously in the 5 minute, we're in a big, we're in a downtrend in the 5 minute. On the 1 hour, we're in a downtrend. 15 minute, we're in a downtrend. So bigger forces are up, but the short term forces that impact the time frames we trade, those are down-ish, but they look like they're losing steam. And that like looks like it could be like, yeah, higher low. So it's good I'm paying attention to that market structure. Higher highs, the higher lows. So now I'm hoping, since I'm long, wow, I really hope this breaks out of here and we can get a trend line breakout. So yeah, obviously in that, if you just go back 5 seconds, pause that note that I write to myself. That note shows really incredible self-awareness. And also awareness of the market structure. You know, I commented I took an emotional trade, but that it aligned with the bigger market, but not the near-term market. And see, I do not want to be out of this. Yeah, I want to be in the market after that breakout. So I'm glad I got out right at the top, waited for it to come back a little bit, got in. Because you just want to stay in this. Like, this could go up another 10 points back to the pre-market, or back to the open. I don't remember what happens, but yeah, definitely you want to be long here. Okay guys, I am back. It is a new day. This is a long video. It's going to be probably like at least 2.5 hours. I think 5 days of trading. Today is Tuesday, March 5th. I will not be trading tomorrow, probably till next Monday, because I traded bad. I've just drawn down too much, so I'm taking a trading break till next Monday. So it's Tuesday, March 5th. So yeah, but there's 2.5 hours of content here, so yeah, getting quite a lot in. Okay, so I got out of this trade, looks like, and this is dumb because if it's ranging, if it's not going against you and it's in a trend, and this is clearly an uptrend, it's dumb to get out. Like, I should stay in here and keep getting these gains, and I miss out on a really nice little move up, unfortunately. And so I should have got back in, because this is breaking out, you know? You really should have stayed in there. I think it moved like 2 minutes after you got out. So those trades really hurt, because you were long. You were gonna get the gains, and you missed out. So that hurts. And I mean, shorting here, I'm fine with that, like a little win. I mean, you just it extended way over the 5 minute. Naturally, there's probably going to be some pullback, so I'm fine with that. A little short. That's like a good counter trend trade, and that's what a lot of counter trend trades should be. Just 1-2 quick points, $50, $100 in your pocket, picking it up off the ground, because it's pretty obvious it's going to come back in that moment. And yeah, I'm about to go for a run, guys. I'm just letting my Apple Watch charge, so there's going to be another cut here in a little bit. I just wanted to, get a little commentary in. So it's looking like an ABCD flag right now. That's what I'm thinking, looking back at it. Up, down, up, down. Lower high, or lower low, lower high, lower low, go up. Hey guys, I am back after my run. I've changed locations. I'm in my kitchen island now. Alright, so what do we have here? Alright, uptrend. This goes down to the 21 EMA on the 1 minute. I think that's a good buy. It's starting to look pretty bullish after all. because it's been in a downtrend. Just ate some food, had a little coffee. Feels great. I'm a little tired after eating, but I want to just push through and make this video. And I had a little coffee too, so that should help. Yeah, looking back at the 1 minute chart, you can see where I sold right before that nice move, and it's just so unfortunate. I mean, that's like 6 points. I would be up $300 on this day. I think I finished like down 200. So and yeah, as you can see, the clock ticking at the top of the screen. That's the live time, so about an hour left in the day. One of these is looking like a good bear or bull entry, like time to get long. Like I should have entered there long because it went down. It made a wick down to an area that 2 wicks had previously bounced off of already. So yeah, I just missed a trade there. I don't know how much it'd be up, only like 2 points probably, but yeah, I did miss that. And yeah, we're up like 5 points now. That was an obvious time to get long. I don't know if I wasn't watching or what the hell, why I didn't take that trade, but yeah, what'd that go down to? Like 581, 580, 50.50. Yeah, it's like a dumb trade to sit out on. And this would be a dumb time to get long because just had a nice dip. I mean, I do think it will go down, but like, I don't know. It broke out to the new high, so oftentimes, you know, more money can come in and it can just keep going up. You don't want to short against that. And I'm happy I did not short against that. Alright, so the market's slowing down on the 1 minute. We got a lot of overlapping bars. If I was going to do anything, I'd want to get long here. But it's very indecisive and just made a move up. So it's hard to say. Alright, 2 inside bars on the 5 minute. I think you just gotta play whatever way it breaks out. Looks like it's breaking out long, so we gotta get in long here. We don't, I don't think, because I'm just watching, but I'm walking myself back through it, commentating what I should do. So it's like watching film in football, you know. They said Tom Brady watched more film than anybody else, and I don't like Tom Brady. I don't like Michigan football. I'm not a fan of Tom Brady, but you know, he's one of the greatest quarterbacks of all time, and preparation is a huge part of why. So that's what we're trying to do now, like prepare. Alright, looks like a false breakout to the upside, so I think we would have lost this trade probably. That's okay though, because it's a good trade to lose on. Alright, aggressive bear bar down. Right down to the 21 EMA. I must have, yeah, I'm away because my screensaver just started. That's really unfortunate because that would have been a great buy opportunity, I think. We'll see what the market does when it comes back. Yeah, so I should have entered. Alright, and I get long. I'm happy to see that. Man, I got out quick of that. That's silly. Because I would expect it would go to the top of the 1 minute Keltner channel. And yeah, it's up like four points. So it should have been like at least, well, it's coming back down now. But, oh, we're done. Oh, so that was that first day. Yeah, I ended on that $50 trade. And there was opportunities to make a lot more money. You know, there was mistakes I made, opportunities I missed. So I only made, I don't know, I only probably captured like 40-50% of the opportunities. And I got out of some opportunities early. Still made 377. So that just shows, even when you're trading mediocre, what's possible. All right, so this is Wednesday. And it all goes downhill from here, guys. Like, today is bad, but it's not like horrible. Like, I still made $200, but I made emotional trades, and I easily could have finished down 400. I should have finished up 600, up 800. But yeah, I'm starting to remember these days very clearly. So today I think maybe I should expand the stop loss a little bit. So you see I have a 4-point stop loss, and that's just because I expect more volatility. Yesterday the 3-point stop loss was working very well, but today I think my thought process is I should use the 4-point. And that long was a bit premature. That'd be a better place to get long, or like waiting for it to come down to the bottom of the range, which looks like that's where I set it. And this is kind of sketch play because it's like I'm going for the opening range breakout, but I like buying support and resistance a lot with opening range because I feel like it has those potentials for big reversals, and you get in at the ground floor. So I'm gonna be right back. I'm gonna leave the recording running, but I'm gonna go grab my notebook. Okay, I got my notepad, so now I can make some recordings, or record some notes. Sorry, I had to send a text to my girlfriend about dinner plans. Yeah, I like this long because it's bounced off. I mean, I would have liked it if I was in at the bottom more, but it went, okay, there we go. And that's a nice long. I like to see that. up 162, up 200, and I think that's a good time to take profits when it hits the 21 EMA, because we don't know what's happening here. Like, this is early in the market. It's gone, it's opened up a little bit, broken out to the top, but actually has broken out to the top. I think that probably would have been a better trade to stay in, or take profits, wait for a little pullback, get in for more profits. So yeah, it looks like a good long. We're just getting in right now. Yeah, today I didn't react emotionally well, but the market did do some very frustrating things. All right, so I just see 2 wicks. That's a get out signal. Now the 1 minute, it looks like a looks like an ABCD flag. So I guess there's like, it's okay to stay long. But optimally, yeah, it's looking very indecision-y. I don't know. This one's really hard because it's like, should I stay in or should I stay out? So I should just screenshot that so I can make another determination. It looks like it is accepting that level. It's not really rejecting yet, so and yeah, when I start moving my stop down like that, that's not a good sign. And it comes down pretty hard. And it stops me out. What happens right after it stops me out? Of course, it goes long again. Right back at the top of the channel. Yeah, and pullbacks like that, just get out. I mean, you don't know how far it's going to pull down to. Better to just wait for it to start going up and then get long. Like that. Like I just did there. Oh, just getting stuff ready for dinner. Alright, what am I missing? Okay, so I got in long, but it looks like I sold too early again on the 1 minute. I should have waited for it to come up and touch the top of that 1 minute Keltner channel. Using take profits like these Keltner bars seems like something I haven't been doing, but I should be doing more. But you also don't want to take profit too early if it's like really good looking price action, which happens, you know. Sometimes it'll just ride outside the band, like above it, because it'll just keep extending up. So you really just gotta like know your price action and be like really realistic. But if it's moving slow or it's a slow grind, And there aren't like that's when it's good to you know, just let it ride. And this is a good place to be long. I mean, it's made a lot of green bars and looks like it's just going to keep going up. So I've identified where it looks like it's going to go down to. Looks like on, I don't know what chart that is. The 1 minute, I drew a trend line like much lower than it currently is at. But yeah, I shouldn't have got out because I got out too early again. Missed out on a real nice move up, like a $3.150 move. Oh, and it just keeps going up. Yeah, that was dumb to get out. Like, I should be long that whole time. And see, now I'm like, this bad emotions, this stuff builds up. Like, I get out too early twice. I get out too early again. You know, these dumb mistakes compound. So I'm just taking a note. I'm actually writing that down. Dumb mistakes compound. Got out too early several times. And see, this creates FOMO, it creates anger, AOMO, anger of missing out. Tons of bad issues in your trading will arise from this if you let it. You know, it's like you have to, the best way to neutralize it, I found in my experience, is just to acknowledge it. Be like, hey, I got spooked out. I got out too early. This was dumb. I just have to go, like, realize that I have the urge now to, like, anger trade, like, take some dumb trades, maybe some big size, which happens later today. And yeah, you just gotta really acknowledge it and be realistic about the feeling, like, oh, this is dumb. See, that was kind of a dumb area to get long because looking at the 5 minute, it's like 2 inside bars and it's breaking down from them. So, but you are buying a pullback in an uptrend, but I just think it would go down farther. That just looks too early. I don't know if this trade works or not. This trade might work. It just looks kind of early to me. But now, see if that breaks up the top. Okay. Let's see, that's a good long trade now, I think. Looking for the double. Okay, I got out pretty early again. Yeah, my expectancy is much lower today. It's like 28 right now. I think it goes down to like 14 by the end of the day. So, yeah, I just really am working on getting that expectancy up. I'm just taking a really important note here. I'm remembering from my one of my mentors told me. So it's about like human psychology. There's these studies. I think they might have been done like by Amos Tversky and Daniel Kahneman. And I know they're really popular in the trading world to talk about. But I think it's worth touching on here just in case, you know, someone's watching who hasn't heard of these. So it's basically like if you, there was like a 20% chance that you would lose $1,000, and an 80% chance that you would only lose $200, and then reversed for the upside as well, like an 80% chance you would win $100, or there's an 80% chance you'd win $200, but a 20% chance you'd win $1,000. You should always accept a $200 loss. Like, take that. It's like you can either for sure accept a $200 gain or loss, or gamble that you'll either take a $0 loss, or there's a 20% chance, there's an 80% chance to take a $0 loss, but a 20% chance you'll take a $1,000 loss. Most people, you want to gamble when it's the upside, and sorry, I gotta make sure I'm watching what my trades are doing. Looks like I've just taken way too many trades. Like, looking at the 1 minute, there should never be that many trades. So clearly I'm trading with cognitive biases impacting me right now. Just making dumb mistakes and errors. Yeah, I should have just got long at the bottom when it came down to that trend line, and just stayed long and expected for like a double top, which is like 4 points higher. Anyway, where was so back to my story. You should gamble and take the 80% chance to get 0, but 20% chance to take 1,000. When you should gamble on the upside when you have a chance to make much more. But on the downside, you shouldn't gamble. You should just take the $200,000 loss, because even though it's pretty likely you won't take the $1,000 loss, that $1,000 loss is like really freaking bad. And I may have messed up this story a little bit. Like, maybe those numbers aren't exactly right. But the point is, it illustrates that as traders and just human psychology, we are more likely to let a trade run that we should get out of, that looks like it'll go to the downside, and we're much more likely to let that ride when we shouldn't. I don't know why this is so hard for me to explain. It's pretty simple, but I don't know. Plug this stuff into ChatGPT. Look it up for yourself. Read Thinking Fast and Slow. Check out Adam Grimes. He's where I learned this. I think he's the one who applied this to trading. I think Tom Hugard may have done something similar too, actually. But yeah, you gotta gamble to the upside. Let it ride. Let your trades ride. Don't get out too early like I did today, because then you'll make a lot more on your winners, which can help pay for your losers. And your losers, if they don't look good, if you see like some price action you see some wicks, some big wicks, or a big candle that goes against you, just get out. You can always get back in. There's going to be multiple opportunities every day to make money. So if you get out of a trade, it's not a big deal, All right, so back to this trading. It looks like it's accepting a range at the top. It looks like it's accepting a range at the top. I'm pretty sure this rejects. But at this point, because it's a range, you just want to be out. Or you want to get in at the bottom. That's okay. I'm fine with that. Because guess what? It looks... it's stopping right underneath the gap. Or the area where it could close the gap from. We're in a bull trend. It just looks... We're above the EMAs on pretty much all the charts you see here. So this is like a great time to be bullish. And I think this trade doesn't work. So yeah, it just broke out underneath the bottom. So I think that's like when you should call this trade off. Because this is like the example where it's like 20% chance you take the much bigger loss. There's like it's better just to accept a small loss here when it doesn't like look great. And yeah, I should have got out. This would even be a potential good short position with like a profit target where the stop loss is. $150 loss, guys, totally avoidable. Should have got out. It broke underneath the wedge, so I'm okay with that. I'm not okay with that long because this is like a U-shaped reversal, and when they look like that, when they look like a U like that, like a very perfect U, or yeah, U, that to me that's starting to look bearish. I would get bearish now, I believe. It kind of looks like an ABCD flag, but it's a pretty long flag. ABCD flags, I don't think, should last that long. The dog and the cat are playing. Alright, my girlfriend's about to be home from work, guys. I am gonna pause the recording right now, and I'll get back to you soon with more commentary. Thank you for watching.
What's up, guys? I am back. It is a new day, and I'm recording this outside. So yeah, took a dumb trade trying to go long in the downtrend. This is a U-shaped formation, so this is just a really dumb place to be long. I shouldn't be getting long. Getting long at the bottom of this range is one story, and I'd be perfectly okay with that. But buying it as it's going down is just stupid. Like, that wouldn't be an ABCD flag because it's still in a range. It's still inside yesterday's bar, so it's not a good time for an ABCD. Now, I'm okay with this long because we're actually at the bottom. Yeah, I should be long here still. Oh, that was the NQ trade that I took. Yeah, I forgot. So I do mainly ES. It's slower moving, and just while people are learning, I think it's better to learn on ES. But sometimes NQ presents really great opportunities, and I still am very open to taking those opportunities. It's just you have to have a much wider stop with NQ. It's like trades at like five ATR multiple of the S&P, which means it's like has 5 times more points, but it moves in a day than the S&P. I know in the 5-minute time frame that's true. I'm assuming it's pretty close to that on the 1 hour. And I think that was kind of a dumb place to short. Because like now we're near the bottom of the range. And I looks like I lost like just right before this. Let me zoom in. Yeah, I got one short and got stopped out right away. That's just silly. That's so dumb. My dog wanted to be out here with me, so we're gonna let him out. He's confused. And now this is a great place to be really long because it's like a secondary bounce. And yeah, I got out too early there because it's like you don't want to get out when it's bouncing again like that. Like this, I'm seeing this now. I want to play all the way up to the very top. Yeah, that's a smart play right there with the MNQ. Like put a swing on. Well, I should also be long. I should have been long. Yes. And yeah, I'm taking notes. I was really proud of that NQ trade, but I kind of wish I was still in it because that could have been 50-point trade, $1,000. If I were to stay in it and hope that I would bounce from the bottom of the 5-minute Keltner to the top Keltner channel. And yeah, I know at this point I'm away from my computer. I don't know if I was doing some work or some housekeeping or something, but I know I was comfortable walking away because it's just MNQ. It's not a huge position. Alright, so I'm recognizing we're back at the top of the range. And I hate that I'm putting in a buy order, because this is like the time to short. Or at least wait and see what happens. If not short, it's the time to just like stop and wait and see what happens. Now it's looking pretty bearish, so now you want to get short. Like it's obvious in hindsight. It's obvious. I was thinking though, like, alright, I went up, it went down, it went up. Now it's gonna, like, okay, let me just draw this. This might be backwards for you guys, but like, this is what I was wanting to happen. Sometimes it'll range, and then it'll do like a micro range. It'll do a micro range near where it's gonna break out to, like consolidate, like accept the level. But this is pretty clear. It's like already rejected the level. And keep dropping my pen. And this is where it's dumb. Like, that's such an impatient trade. Like, just get in long. And that is a bull trap. It's almost like a mini ante. My ante trade. It's inspired from, like, Adam Grimes, who I think got it from Linda Rashke. Really, really powerful trade setup, but yeah, it's just, see, I should just get out, take the L. So this doesn't look good. I'm taking the L. Exit market and cancel. $25. Had $52 at one point. And yeah, this is like, I put the take profit real close because like I recognize it's bad. I want to get out, but instead of getting out, I do exactly what I was talking about earlier, and I take the gamble to the downside. I thought this was so close to the top, the probabilities are higher that it would. Probabilities are much higher. It would just go up and touch the top, but that was like a 20% chance of losing way more, and like 10 times more than negative $12, negative 25. And yeah, so we lost that one, and I got in long again. Very dumb. See, you can't go for A, B, C, D flags at that moment because we're inside a range. Like, if it was that's just really dumb to go for that long right there. Like, that should have been a short. If it goes up, hold on, I'm gonna do another drawing. So, this is the new drawing down here. I got in at that second leg down, but for all we know, this is a range and it could just keep going down. But it was a third time, it went back up and consolidated. Then we know, okay, this is probably acceptance. It's staying over here. But yeah, huge drop off. I mean, how much did that just sell off? Okay, at this point I take an anger trade, and I get in, I double this my size, and I get in with 2 contracts. And I'm fine with the aggressive play, like, if it's not in response to anger and making a dumb trade. And I just gotta be more conscious of my anger in my trading, because anger is a big issue. Like, I'm such a chill guy generally that it was very surprising when I started realizing like my anger was a big issue. Okay, this is Thursday. This is the worst day. I didn't realize we already came up to the end of that day, but yeah, so it's news breakout. My plan was trade whatever way the news breaks out. Of course, this is already my third trade of the day. and I lose this trade too. So yeah, just a horrible way to start the day. Down way more than I should be. And I didn't follow my plan. My plan was go with the news, go with the opening breakout, and I did not go with the opening breakout. I tried to fade it like an idiot. I don't know how I keep messing that up, but I don't think I'll make that mistake again. Because it was essentially gambling. I was taking random trades with very low probabilities because it's shooting up. So I'm taking really dumb gambles. It's like not even it's not a gamble if I joined the trend. Like if I would have joined it, it would have been like, okay, this is smart. I'm joining the momentum, and if I get stopped out, it's like, all right, I got stopped out joining the momentum. But it's just like the desire to catch a top or catch a bottom is just like really powerful, and I allowed that emotion, the urge to be stimulated, the urge for excitement, falling into the trap of turning trading into gambling, and yeah, it was really, really stupid of me, and I gave away a bunch of money. I didn't record, but I gave away money for trading today, the night before this, on a Bitcoin trade. I entered at a time when I shouldn't have. It was an okay time to enter, but I did not use a wide enough stop because I wanted to use bigger size. So I used bigger size. I had to put my stop closer to not lose too much. So of course the market went down to my stop, got me out, went my direction, and I think I probably would have, if I had waited like 15 minutes to enter that trade or got out when I saw it wasn't working, would have made like more than 4 reward to risk. So it would have gone really well. My dog is on me to go in. And yeah, you can see how slow this is moving. Like, I just was wondering if this was like not sped up because it's moving so slow. And it's making such a flat line. So I'm like, what time is it? It's 7 o'clock. So yeah, still way before open. And when big news plays happen like this, where it like goes really hard one way, oftentimes the market likes balance, right? Its favorite place is an equilibrium, where it's just like a range, right? It's where it spends most of its time, like 80% of its time in a range. So it doesn't like big moves like this. I mean, if I was bullish, I'd love big moves like this, but generally the market tries to stay at balance and correct. So if there is a big move like this, and maybe like a lot of the algorithms went crazy, just kept buying, it can sell off pretty hard, or it can just go whatever opposite way. Like if it drops a lot, it can also come back. And sometimes it doesn't. Sometimes it gaps and just goes like crazy. Like it'll in capitulation, or it can just go up like a lot. But generally, I think it likes to go back, and that's hard to read. You have to just listen to the price action and make a bet, and you probably have like a 50-50 chance of being right. And that's important of keeping your stop low and good risk management. But yeah, so I'm thinking like, okay, this could reverse down. I also want to mention, guys, I tried joining a chat room today. So I was like listening into that, and I think that also like really hurt my trading. I want to execute all my trades on my own, and like from now on, I'm definitely gonna trade in a vacuum. Like I always have traded in a vacuum. I never like take tips from anyone. I want to learn to be self-sufficient. Kind of like a teach a man to fish story. I want to learn to fish. I don't want someone just to tell me what trades to take. I never have, and even like when I first started, when I probably should have been like following trades from someone successful to learn how to trade, what moves to make. I didn't. I was always like very wanted to do it on my own, even if I'm not losing lots of money, which I had. So the point of the story is that I did something very abnormal for me, and the only reason I did it was because it was Al Brooks' chat room, who was the first technical analysis book I bought. I'm way more influenced, like my style is based way more on Adam Grimes now, but I still think like Al has technique works for a lot of people. I like Adam's approach more because it's a little bit more it explains the reasons why stuff happens a lot better, I think. There's a lot more statistical analysis. I just think I really like Adam's approach a lot. And for people that Al Brooks works for, that's awesome. But so anyway, they were doing like a free. I'm not a member. Like they have a free chat room that I'm a member in, just because I like to interact with other traders. Sometimes ask questions to other traders. And they were doing like a free live stream. So I was like, what the hell? I'll join this. They trade ES like I do. Some of their setups are very similar to mine, but it just got in my head. Because like here, we're at 810 now. Like I was expecting to be short. I should have been short. You guys saw me take a short trade that I got out of. But I was just like kind of annoyed. Like I didn't believe the lady who was like leading the free chat room, and I just like, she was short. She caught like a lot of that. And for some reason, I just didn't. I think probably because I like didn't want to be influenced, even though I was listening to something. And it's stupid. I'm never gonna do that again. But I think it leads to bad trading. And yeah. And then at this point, I'm thinking, all right, I should get long now because a lot of that gap just closed. Just like a quick counter trend trade for like 2, 3, 4 points. Nothing crazy. Just went so much out of the 1 minute calendar channel, which happens all the time. Like the 1 minute has a lot more deviations outside the calendar channel than the 5 minute, which has a lot more than the 15 minute and just a higher time frame so you go. Which I'm not running calendar channels on my 1 hour yet. I know I start doing that. I don't know when I start. This is my, let's see. I don't know how many days of trading I have left after this in this video. This is like a crazy long video. Like, videos just keep getting longer because I don't finish them before the next trading day, and I want to just include the next trading day and give commentary over it. So yeah, ideally I would review my trades every single day. I haven't been doing that, but yeah, I would like to start doing that. So then my videos aren't like one, crazy long, but two, it's a more regular review practice. I'm probably incorporating what I learn quicker and more efficiently. So yeah, that's opening range break, guys. Open like 12 points. And what happens here? Am I long or short? I don't know why I would get long there. Like see, to me that's an obvious short because it's a big gap up. That looks like a bear flag. Like, I should be short there. I'm gonna grab some water though. I'm gonna pause my recording. I'll be back in a sec.
All right, guys, I am back again. Another new day. So yeah, this is still Thursday, which was my really bad day. $1,400 drawdown. Yeah, you just saw a clip there of the live stream I was in. I thought I edited all those out, but whatever, I'll leave it up. Not editing out because I'm like trying to hide that I was in it. I've already said that in the video. I'm very transparent. My style is my own, but my style, my rules. To me, but you know, I was curious to see how another person traded, and my trading just suffered so badly. I feel like now that's a great time to short, I would think, because it's going back to the top of the range, right? Like, we should get short there. And that's a dumb entry because it looks bearish. It just went to the top of the range. Yeah, that's a dumb trade. And of course I get 2 contracts in. Really dumb. That's anger right there. That's listening to my anger. And yeah, so this day is almost done. Easiest way to lose 1,200 is just do what I did today. And that isn't like the bigger range, it's the micro range, but yeah, today really sucks watching it back, but it's about to be over. New day coming up, Friday, March 1st. And this is just me chatting in a Discord. Probably should have edited this out, but I did not. Sorry about the mess back here. Girlfriend's at work and I'm doing some laundry. So So I like this short. Because at the top of the range, it looks like it's going down. Yeah, I like this short. I'm okay with this. Even though we are in an uptrend, it's like a good counter trend fade play. But yeah, looking at it again, it's like we just want to be long today. So that was an okay counter trend fade. I would have liked to get in right at the line, made another point or two, like another point and a half. I think that was a bit aggressive, but yeah, we just want to be long all day. When you see these uptrends, you know, if you look left on the 1 hour, it's broken out. So yeah, we just want to be long, like all day. And we're getting to the bottom of the 1 minute Keltner channel, so we know we want to be long. This looks like a good long entry. And yeah, we take it. And of course it is the right thing to do. And oh, I got out. Oh no. Wait, I'm not in a trade? Is that... Okay, that's a dumb place to fade. See, I don't know why I'm thinking that it's exhaustion, because this is still like this should not be a time where you take a snap pullback trade. It's making higher lows, so it looks like it's just gearing up for another big move to the upside. And so this is where, you know, sometimes it's hard to follow because it goes pretty fast. With it on 8x speed. But yeah, I should be long here. That was a dumb place to short. I should still be getting long. But guys, like, I've been so dumb with a lot of my trading. Not really following a good strategy, being inconsistent, taking random entries and exits. I need to like identify, hey, are we trending or are we ranging? We're trending, okay. I'm gonna get in on pullbacks with the trend. I'm gonna do counter trend fades for just like a couple points. Is it bottling up? Is it looking like it's gonna break out? Okay, I'll get in where it's bottling up at the bottom. It usually bottles up in like I call it micro ranges, like it consolidates. Wait to get in at the bottom of the micro range if I'm going to long, because oftentimes, you know, it'll just keep ranging and I'll get in at the top of the micro range and I'll get stopped out, which is exactly where I should enter. So yeah, like here's a good counter trend scalp. I should have just taken the profits while I was down like 1.5 points, because now it looks like it's starting to go up. Yeah, a little cup and handle. I should have got along there. Ugh, watching me try and short this is just so stupid. It's like, it looks like it's gonna keep going up. Oh wait, was I long? No, it wasn't long. Well, doesn't matter. what I think of this trade. I think this is a silly trade. It's just it's too choppy. Like, we shouldn't be taking any trades right now. I mean, look at the 1 minute, it's choppy. If I'm gonna get in, I want to be long, not short. Being short here is dumb. I mean, this trade's working out for me, but like, get out. You got your 1 point, your 2 points. Take the W and get out. It's very uncomplicated. That's the right thing to do. But of course, hindsight is 2020. And I'm just hoping that by watching these videos and reacting to them, I can increase my awareness in real time, so I can be better at recognizing. Yeah, that would have been 5 points if I got in at the bottom there. In like all day, I'm pretty sure it's like a slow grind up. And it goes up to like the 40s or something after all this, I believe. Another area where I shouldn't really have a trade on. Cause it's like, it's just dumb. Like, I should be, if I'm gonna be anything, I should be long. And I know, like, the 1 hour, it's way extended on the Keltner channel, so that's fair, to want to be short. But while it's breaking up like the way it is, parabolic, I don't think it's a good time to be short. It's just not a good time to be short. Like, there's still a good amount of room left to run, and yeah. This coffee is very bitter. Bitte. German for please. Bitte is German for please. You can use it in a sentence. Please, let me make money in the market, bitte. Or let me be disciplined enough to follow my rules, to make money in the market, not fight the trend like an idiot. We're coming up on the end of the day though, guys. This is a great channel for just like counter trend and with trend. Counter trend fades and with trend pullback entries. I should have been doing that all day, but unfortunately I did not. Opening my blind a little bit so my dog can look out the window. Let's just grab another short trade. Ugh. God. It's like the majority of the trades I've taken were short today, which is like the opposite way I want to trade. It's so silly. Be right back, guys. Oh, just had to get my notepad. Counter trend fades are one thing. Alright, we're going to start the next day. It's Monday, March 4th. And look, this short is like, it's breaking out to the upside. It's near the middle, it's near the 21 EMA. It gapped down. So when something gaps down, you naturally want to think, all right, there's a 50% chance the gap will close within 24 hours and a 70% chance the gap will close within 72 hours. And like, I don't know, it's just an aggressive entry. It's like, there's been 2 bars and they're both upside, so it's like fading that. I get it if you're fading at support and resistance, but there's not really a support or resistance there. Well, I guess there kind of is, those wicks from before, but I don't know. I just don't think this is a good fade, because we don't know what kind of day it's gonna be. It's in the middle of, it's in a range. I don't know. I don't hate that trade, but I don't really love it, so I'll give it like a D. Yeah, like I see like how I thought it looked like a pullback. Okay, so I say I'm gonna be done for the day. I don't think I'm done for the day though. Am I really done for the day? Because I said that before, and then I don't walk away. Like if I'm gonna get short, that now is when I want to do it. But it also could be a bear trap. And it seems to be accepting that upper level, and it's made higher highs, or higher lows and higher highs. Just looking at the 1 minute, just to really get a feel for what's going on. Like this looks like a time to get long, because it looks like it's kind of bottling up for a move, a push up. So we're at, oh, and it's coming down. Like that would have been a good long entry. I think. Yeah, as it comes down, breaks below. Because we're above, I mean, looking at the 15 minute, the 15 minute looks very bullish. The 1 hour looks very bullish. This just looks like bottling up to go big. In my opinion. But on the 1 day, I guess on the 1 day, the top of the Keltner channel on the 1 day, it looks like a good time for a counter fade. Now it's starting to look more and more bearish. So I'm happy with, yeah, I'm happy to get bearish, because this is looking like a U-shaped, like reversal maybe. And when you see this type of price, it's also the kind of the top of a range. It looks like, yeah, the 15 minute, so I'm saying it's dumb to be short because we're in an obvious uptrend. The 15 minute does look very bullish, but a lot of other time frames, I mean, the 1 hour, it went way above the Keltner channel. It looks like it could come down a bit. So I don't think it's really dumb to be short. I think it's a good move to be short. Other than it's a lot of inside bars. A lot of inside bars. So yeah, I wouldn't have to take profit there. I'd have it all the way down at like 33, 32. Because when you see these like U-shaped formations, it often makes like a full U. I don't know. Very happy to take profit there though. That's a good trade, I guess. Well, I guess I would have liked to see it much lower, but like if I'm gonna stay short, like take the profit, have it go up, re-enter at the pullback. But that big wick on the 5 minute, like this looks awfully flaggy. It's like reluctantly coming down. And we are on a fat uptrend on the 1 hour. So I do think getting long would be a good move here. Right now, like, or a little bit ago. Because it does look pretty, yeah. I mean, it's moved up, so. And now, after that, you expect it to go at least another, like, 4 points. If it breaks the top of that range, you know, you'd think it'll go outside the 1 minute Keltner up to 144. But I'm wrong, and I don't remember a lot of this, guys. I'm happy I'm not trading now, because this is a bad trading environment, and I would just be giving back a lot of gains. But yeah, now it is looking really bullish. Because it did break out of the top. We just want to be long like this whole time. Definitely don't want to be short. Definitely don't want to be short because there's higher lows. There haven't been higher highs yet, but there are higher lows. So it's like an upward wedge, an upward triangle. And it's like, it's just dumb to be short here at the top of this. As it'd be one thing. Let me do some more drawings. It would be one thing to be short here, because it's up, down, up, down, up, down. It makes a lot more sense to be short in this environment at the top of a range. But if the range looks like this, it's creating, it's staying at the same highs, but it's making higher lows. That indicates like more price acceptance at a level, and we don't want to fade this. This is more fadeable, but this, we don't want to fade that. That's a dumb fade. It's a very dumb fade. And it looks like it wants to close the gap from a few days ago. So, yeah, I mean, getting it long at the dip around like 38 or even 40 once you saw it was going to be going long. That's the right move. And, you know, I should just be long this whole time because it looks like this looks like it could go parabolic a little bit. And when we trade the 5 minute, parabolic only means like capturing like 8 or 10 points, but that's a lot. I mean, that's like a 20% of the day's range, and you can easily make a living capturing 10 points a day of ES. Again, dumb to go short there, but I did go short at a trend line, so at least I had sort of a reason to. But we don't want to go short into a rapidly rising market, which this is going slow, but like in the context of the day, it is fast. I mean, this is like a 2.2 ATR environment. I think I have like a low ATR, I think. I don't know if I've adjusted it, but I have a low ATR now. like 4 or 5 bars. So it like measures very recently. I know I'm taking right now. I'm saying so much fading, not joined the trend once. So it's like need more friction on fades. And not like get out now and get long, or get out now and get prepared to get long. Because it's like we don't want to be. If you get 1 or 2 points on a fade, just freaking take it. It's like you're already going against the market. If you're right, even by a little bit, that's a good thing. Take that. Like it should just be limited to 1 to 2 points. Of course, unless of course it's like a snap pullback or like a major trend reversal that you want to ride, like that's a different thing. But if you're just like in a if you're in a trend and you're like taking the fade trade, take the 1 to 2 points. It's obvious that is the right thing to do. So I see it's a lot of inside bars here. So yeah, fade trade, just take the 1 to 2 points. Like it's the right thing to do to take the 1 to 2 points on fade trades. Like, yeah, pre-amount myself so many times because I've had so many of these trades that would contribute positively. Now this was a good fade trade, but like let's. All right, too early to enter. I think I would have waited till the bottom of the 5-minute Keltner channel. Or waited till because this could still be a range. It hasn't risen that aggressively, and this could still come back down to the bottom, which I want to say I might. Especially because the NQ does not look nearly as the NQ does not look nearly as bullish. The NQ looks very rangy and flat, and the NQ has been moving the ES quite a lot lately. So I think now we just want to get out. Like we should just get out, take the small loss, because it doesn't look good. But instead, what should be a $25 to $50 loss turns into triple that, maybe even more than triple. And like that is the first time it would be a good buy, because it's, or this would be a better buy. Sorry guys, just doing a little email stuff. And yeah, like I should stay long here because it's a dip, you know. You want to stay with. It just I got out too early. Alright, I guess we're on a new day now. I don't know. I guess I just stopped trading for the day. Or stopped recording. I can't really remember, but yeah, it's silly. Yep, and I'm acknowledging, hey, I just missed a nice long. So, usually when bars like this happen, you know, you want to either join them or fade them. But we're in a downtrend, so I think this would be actually a pretty appropriate time to fade. Looking at the 1 minute, definitely shouldn't buy. Definitely should not buy. That's a dumb move. At that point, I want to get short. And yeah, the FOMO and anger I got from this trade was just like, I felt so stupid for missing out, and not being short. Like, I just felt like such a failure. Like, the market really rejected that move up, and so that just means, like, hey, there's not really going to be any bulls in sight if the bulls can't show up after that. So it's like, you just want to be short. And I don't know how long you want to be short for, right? You just want to be short until it really starts to come the other way. But yeah, guys, this is the last day of trading because I kind of blew up today, going long when I should have been short. Yeah, 3 really dumb trades so far. Could have been, if I went the other way, it would have been 150, 150, 150 to pay me. But it was really dumb. I went short, or I went long when I should have went short because we're in a downtrend on the 5 minute. We're gapped down. Like, this is the rejection we've been expecting. Most of it happened when the market was closed. But yeah. Yep, should have just been bearish. I mean, it's hard to get short after that 5 minute candle that goes way to the upside, but like, I should have taken that candle up, got in, but I had analysis paralysis, and then back created like a anger of missing out, an AOMO or a POMO, pain of missing out. So I was like, I wanted to keep joining. I wanted to like catch the bottom of the pullback, but instead I missed. That was an actual pullback, and I knew that was a news bar, and I should have had a plan going in. Like, if it goes up hard, I will fade it because we're in a downtrend. If it goes down hard, I'll join it because we're in a downtrend. If it goes up fast or slow, I'll maybe buy in because it means it's more acceptance, or I'll still get in on the pullback. Yeah, just a bad day, bad execution, poor decisions all around. It's down, trade's down to 592. We could have got in at 514, 510. and had like 15 points on our side, which would have been $750. So it's unfortunate, but is what it is. I mean, we can't change it now. All we can do is change what we do going forward. And hopefully, you know, react to the market better. Ugh. See, that looks like an acceptable time. Like around an acceptable time to get long where we are, because we're at the bottom. It looks like. Except no, it doesn't, because there's wicks on the 5 minute, and there's not really any bulls to be found. So you want to just keep staying long, or staying bearish, really. Like, you can get long after a lot of sideways movement at the bottom, but not like 2 bars of sideways movement. Wait for like 5 bars of sideways movement, and then when it's like really looks like it's actually going up, then you can get long. My last trade of the day, and guess what happens? We get stopped out. And alright guys, so that pretty much does it for this video. I really appreciate you watching if you did watch. If not, that's okay. I'm not doing this for I'm doing it for viewers if viewers want to tune in, but this really benefits me so much, because going back, looking at film, being like Tom Brady, who I don't like but I respect as a quarterback. And yeah, I mean, I really hope next time I get money in my account, which next week. Today is Thursday, March 7th. So once I get money in my account, I really hope that the next time I start trading, I can actually put together a string of wins. It comes down to like being disciplined, trading less, making less decisions, not going for as many counter trend fades, joining in pullbacks when it's trending, going for opening range breakouts, and then, you know, going for some fades and ranges when it is a true range, and just getting more experience under my belt so I can be a better price action trader. Alright, thanks for watching.